May profits be upon you. Welcome to another weekly market forecast. The market we're looking at this time are the commodities markets, specifically the metals. We're going to look at gold, silver, platinum, and copper. All right. I haven't done those in a while, so let's get to it. First thing I want to notice is that uh, this is the weekly. We're looking at the monthly. On the monthly, you can see there's no reason to think that we are bearish. All right, it's all bullish. Look at this impulsive move to the upside. This is a parabolic move, man. Parabolic. All right, and you can see that this month has been a very aggressive candle month. All right, and we took the high of the previous month, and we still have 8 days to go. All right, right now the monthly is definitely bullish. All right. Uh, the weekly is also bullish, but there's some more nuance here. Uh, After this break of the structure here, which is the old highs, and we continued higher, we had a pullback into the breakout area. Let's just extend this all the way over. And you can see that price found support at the old highs and pushed higher, creating this area of fair value here. All right, this V-shaped area here. Those lines are quite squiggly. You got to excuse me, but that's the way it works sometimes. I don't know why TradingView has that, but we can see it more clearly here. We can see that we have a push up, and I'm looking for a pull back into the breakout area to see if we find support there for higher prices. But there is no sign of a pullback yet. Okay. We are bullish on the weekly as well as the monthly. All right. Now, I want you to see how price pulled back here. Now, quick lesson. Each of these candles is a week, represents a week, but price is fractal. So I'm saying that to say this is a candle range. This is a candle range. This is a trading range. All right. The same as all of these. All of these are trading ranges. All right. And in those ranges, we'll have a higher high, a higher low, higher high, higher low, and we'll also have a break of market structure for a lower high, a lower low, a lower high, a lower low. This is how the market moves. We have a trend up, and when there's a trend change, there's a market structure break, and you start to see the other side of that mountain. This is the market makers buy model, and this is the market makers sell model. That's all this is. All right. So each range should be looked at the same way. Now, if you use your Fibonacci retracement tool, you can see that if I put it from the low to the high, this is the 50% of this candle range, of this trading range. All right. And what do we look at? What are we looking at? We're looking at premium prices and discount prices. You want to take your shorts from premium price. You want to take your longs from discount, right? If we go down to a lower time frame, like on the daily, we can see how we can set up for optimal trade entries, right? If we look at the golden ratio, 0.618, 705, 786, in this area just below the equilibrium, the 50% of the trading range, this is where we look for price to go to. Just bear that in mind, right? We want price to find support in those areas to push higher. All right. Now let's get back to structure. All right. We're on the daily. We see that the area of fair value was formed here. All right. It's cutting through an area where we found the weekly fair value gap. And inside of that is a nested daily fair value gap. All right. Neither one of these have been traded back into yet. But we know that if price does come back here, this will make for a likely high probability trade back to the upside. All right. So if price comes down now, I will happily look for my long setups. I'm not just going to jump into a long because price could torpedo and go back go on through this and disrespect the whole mess. All right, but we work in probabilities, and I'm looking for price to find support here if it gets through this here. That is a bullish fair value gap on the daily. 1, 2. All right, this is a bullish fair value gap. Price has traded into it one candle. You see price leaving that wick behind. That is showing respect. It closed within the fair value gap. That's not a good indication that price is going to come back out of here. All right, that's more of an indication that price is going to disrespect this daily fair value gap. That's what that is. All right, but it's close, so we're going to keep watching it. Now, what I tend to do is I go a little deeper into whether this candle has anything inside of it that will say it's going up or it's going down. All right, on the lower time frames, we look at the structure on the lower time frames. All right, and what do we see? Let's get rid of the lines. All right, and what we see is price had an aggressive candle to the bottom of the area, this fair value gap on the daily. All right, but we didn't produce bullish fair value gaps. That would say price is probably going to continue higher. No, what we see is price going into a bearish fair value gap here. All right, and these lines are usually straighter. All right, and we want to see if price will disrespect it or not. All right, so we have it down to one fair value gap on the 4 hour, a bearish one. All right, we are inside of a bullish fair value gap, a daily, but there's a 4 hour bearish fair value gap. If we disrespect that, if we disrespect the bearish fair value gap here, I will mark it for you. Boom, 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 bam. All right. If we disrespect it, likely price is going to go higher, find support here, and move to higher prices. That's what I'm looking for. There's nothing saying that price is definitely going to come down to this the daily fair value gap nested within the larger 4 hour fair value gap. There's nothing that says it has to do that. All right. And the geopolitical situations right now show that investors are putting their money in the safe havens right now, which is why the price of gold is pushing up higher. All right. And I'm expecting some weakness to come back to the US dollar index. All right. And the US dollar itself. So that will allow prices in gold to go higher. Okay. People will take their money out of the US dollar and put it into the safe haven of gold, and which attracts international investors, right? So let's see what it does here. All right, let's see what it does here. Let Monday get started, and we'll see if price will break the fair value gap here or respect the bullish fair value gap and push price above these highs and continue to the all-time high, or if it respects this bearish fair value gap here and we start to turn over, where I will be waiting for a high probability trade set up to the upside. That's gold. Let's look at silver. Silver is a little different, a little easier to read. All right. I told you before that I've been telling you on the daily that we are in a channel. All right. I don't trade channels all the time, but this one's very obvious. All right. And I told you here that price would probably continue higher. We swept that low. We swept this liquidity low, and price pushed up higher with a bullish market structure shift to the upside, and price pushed higher. We pulled back, moved higher from this area of fair value. Price pushed down. This is the break that we made. Price pushed back down, found the demand zone, and pushed higher. Boom. What did price do? We took that high, took that liquidity, pulled back, and where are we at right now? we are at an area of demand. This is a area of demand. It's also the area of fair value. All right. And what price likes to do is come back and offer fair value if it's not seeking liquidity. You see how price tapped it and gave that respect wick here. I'm looking for price to continue higher from here. All right. I'm looking for this this fair value gap to hold. All right. Maybe the next candle pushes in and then we can take off, but I'm looking for a price to hold here. I am bullish in in silver as well. All right. If the demand zone does not hold, this low is going to get liquidated, because if price is not not trying to offer fair value, it's seeking liquidity. All right. And once it takes that liquidity, I'm looking for price to turn around. We'll see. All right. That is silver. Platinum's been a mess. All right. You see, it's been a sideways mess. But if you're trading the range, like I keep mentioning, this is a Fibonacci tool, and these are my what do you call it? My my specs on how I got the lines drawn. All right, 25% of the range. All right, just divide it. When price is ranging like it has been a long time ranges, you want to take buys from the bottom and you want to take sells from the top, but you want to section it out to the top 25%, the bottom 25%, and you can see how price reacts once it gets down here. Yeah, we went down, found pushed up higher, came back to it. This is the entry to take it all the way to the other side. All right, I'm not looking at fair value gaps in the middle 50%. I'm not looking for fair value gap action there, because they'll be disrespected. I'm looking for highs and lows and highs and lows. I'm looking for those to get swept, where it's going to go from one side to the next, and when it's ranging, until you see a breakout. Now, price is heading toward. It has already taken a trip to the highs. I'm looking for price to find a low to sweep and then go back up to the other side. That's what I'm looking for in the platinum. Platinum's not one I enjoy trading right now. I haven't made a trade in platinum in a minute because it's been ranging. But for more aggressive traders, this is a great area this is a great way to find those trades. I'm looking for price to turn direction when it takes out one of these two lows. This is a equal lows here. This is the one that I would love to take a higher probability trade from. All right, this one is for a more aggressive trader, but we'll see how it goes. All right, I'm bullish, but I'm waiting for a buy setup, a proper buy setup. Now we're moving on to copper. Copper on the weekly. What do we have? Do we have a fair value gap to look at? Yeah, but this isn't a fair value gap that I'm counting on. All right, right there. All right, this is a bullish fair value gap. I'm not looking for price to come back down and use that to go higher. I think that's low probability. One, because it's so small and thin, and price doesn't have to come back down here. All right, now it doesn't have to. Price has just swept that liquidity high. All right, I like that. I do like that. All right, we just swept that liquidity high here. Why do I got an S there where it should be X? All right, so it could use that to pull back for lower prices. But I'm looking to see how Monday's candle forms. All right, let's go to the daily. Let me get rid of this first. All right, let's go to the daily. And we see that we have bullish fair value gaps here. All right, this is where we swept liquidity, and I'm expecting a pullback of some kind. All right, I'm waiting for it to happen. I'm not just going to start taking shorts. All right, we have the bullish fair value gap on the daily. Price has stabbed into it once, and gave a nice respect candle. I'm looking for the second candle to come down to about half of that, to come down to about half, and then form the body form up here, and we take these highs. That's what I'm looking for. All right. Doesn't necessarily have to happen, but that's what I'm looking for. I love the fact that it has shown respect here to the bullish fair value gap. I'm looking for a 2 candle move, one in and then one up. All right. And one in and out. One in or one out. That's 2 candles. All right. If we go to the 4 hour, so I can look inside of that wick, here is what caused the wick. We have a bullish candle coming out of the fair value gap, the bullish fair value gap on the daily. I should put a D in there, shouldn't I? Let's see. Let me see if I can get rid of that. Okay, there you go. Let's try that again. Boom. All right. And let me put a D for that's wrong. All right. That's wrong. All right. Let's try that again. I pressed the wrong thing. Don't worry about it. All right. So that's a very aggressive candle coming out of the daily fair value gap. And you can see on the 4 hour, it has formed a bullish fair value gap here. All right. Could price use this to go to higher prices? It most certainly could. Could stab into it and take out these highs here. That would be a great scenario. All right. Could happen. All right. But I love the aggressive nature of this candle coming up, and I like the highs here as a target of liquidity. So I am bullish in copper. All right. I'm looking for prices to continue higher. Should they, should this low not hold, that's fine. I'll wait for price to come back down. And we'll see if it creates bearish fair value gaps along the way. But right now, the bullish fair value gap, the aggressive nature of this candle, its impulsiveness, I'm looking for price to push higher. This would be a very nice sell to a stronger buy area that I would love to see happen, so that price could come back into it and use it for higher prices. Hope that's pretty simple to catch. I hope I didn't overcomplicate anything. I am looking for prices to go higher towards these all-time highs there. So, hey, that's not all-time high. I'm sorry. We have highs over here, but this is a high that I would love to see price reach, because I think it will. Thank you for watching my video, and thank you for hanging this long to the end of it. And I hope that your trading week will be good. Now, listen, I put out the indices video analysis for the upcoming week. I put out one for the majors, the FX majors, all right, to include a nice breakdown of the US dollar index, and then what happens when that one is weak, and what I would do with the majors. So the major pairs like Euro USD, Pound USD, Aussie USD, New Zealand dollar USD, USD Yen, USD Swiss franc, and USD CAD. So I want to leave you those videos in the comment section or below this video here, and I'll leave a link on your screen. And thank you again for watching. I'll see you in the next video.